Hi, another summary from Alex Rubinstein and Latam Wealth. Very brief summary about what's going on, an update. And basically, we got oil coming down precipitously. I think it could touch very easily the 30s. We got iron ore falling also. We got some sort of an exception in copper, which really has been propped up by hedge funds. No real demand there. We've seen excessive inventories in China, and most of the positions in Chicago Board of Exchange are speculative positions. So, for whatever it's worth for Latin America, it's a bit basically, aside of the political issues going on in Brazil, I think it's just a bunch of bad news, and we see all these economies, main economies in Latin America, let's say, starting up from Colombia all the way down to Chile and obviously Brazil. All the countries have been affected by lower commodity prices and increasing debt, and obviously the central banks have not been able to bring more liquidity into the markets, and even in the particular case of Chile, where rates have gone down as I predicted it will, and I think they will fall much more. Whereas globally, obviously we've seen amazing and historical low levels of volatility, which basically short volatility is some sort of a hedge for people that are long equities, and also a speculation. But we got a Fed meeting going on, and let's see whether, of course, I think they're gonna hike rates, and this is the June meeting, and let's see how about inflation. But obviously numbers are deteriorating. Even we've seen some green shoots all over. People seem to tend to be a lot of optimism on this, specifically in developed countries. Whether for whatever it's worth in China, we see the real numbers, not government numbers, where we see actually contraction of the economy. I expect the economy, even though the Central Bank of China has been, injecting liquidity, trying to use all the tools available to try to keep the economy going. It's obviously something structural that has to be with commerce, and it would not be solved in the short term. Bottom line, I think it's a good time to have a reasonable amount of cash. I think it's a good time also to either hedge equities or even maybe take some profits out of them. We've seen, the FANG stocks, Apple, Facebook, and everything take a hit lately. Might be a bit of a dip, or it might be, the beginning of some sort of a profit taking. I don't see a significant correction, very deep correction, because we know that obviously some central banks like the Swiss National Banks are outright directly buying equities, which is ridiculous. At this point that central banks would be buying equities, it absolutely makes no sense. And we're going to see what's happening with the Fed shrinking their trying to shrink their debt balance. Although rates all in all are going to remain relatively low, I don't see a reason for Europe to start hiking rates. So all in all, basic conclusions, whatever for China, I see obviously a lower economy going to the end of the year. I never try to get into politics. We'll start seeing slowly the UK negotiations, and I don't think the movement, anti-Euro movement, is over at all. Even though you got a reversal in France, and as far as the United States, obviously all the hype about all these reforms is as I said last time, it's going to take much longer than expected. And as far as the economy We see already, deterioration in credit card, in credit, and not only in the United States, but at a global level and at a private level. And obviously, deficits are going to be, continue to increase, and therefore debt is going to continue to increase. And so I think entering June, July, August, I think it's a good time to be defensive. And I also am starting to like gold at these levels, maybe a bit lower, but from here, I expect even without global tensions, political tensions, I see some sort of an opportunity to have a small part of the portfolio in gold. I see lightening up in equities, and I think wait and see sometime pays, and I think this time is going to pay off to lighten up. So that's for today, and we'll be back soon.